All right, let's move on to Microsoft because those numbers are out as well. And we have that stock moving sharply up more than 6% here in the after hours. It looks like on the bottom line, let's start there, Q3 EPS, I see coming in at 346. I don't see a compare yet on that. On revenue though, I see the 70.07 billion. That is a beat. The street was closer to 68.48 billion. I'm looking for Q3 Azure, other cloud revenue, XFX, up 33%. The street was at 31%, so another beat there, and that helps to explain why, at least initially here, we're seeing a strong pop. Q3 Intelligent Cloud revenue, 26.8 billion. Street was at 25.99 billion. Q3 Azure growth attributable to AI, 16 points. Estimate was 15.6. So a lot of beats across the board here. We don't have guidance yet. As always, Microsoft would offer that after the bell.
And in particular, guidance on CapEx is going to be interesting, as well as the financial guidance coming from the company. Productivity and business processes revenue up 10% for the company to nearly $30 billion. Intelligent Cloud up by 21% to $26.8 billion. And then that more personal computing category for Microsoft up 6% to $13.4 billion. As you say, we have to wait for the call to get more. But Satya Nadella in the statement saying in the commentary here, cloud and AI are the essential inputs for every business. And Amy Hood, the CFO, talking about a strong quarter here. So not getting a lot of color commentary quite yet.
You'll get so on the call, the conference call. That's when CFO Amy Hood's gonna. You'd expect her to give you that guidance,
right.
More color about cloud performance, AI spending, CapEx plans. What do they say about Trump tariffs? Because you think about Xbox, you think about tablets, and what do they see ahead? Joining us now for more earnings reaction. Let's get to Brent Thill, senior analyst at Jefferies. Brent, Microsoft numbers are out. Initial response, positive, but interesting to get your reaction to the report.
Hey, Josh, really good. I mean, Azure accelerated. It was 31 last quarter and went to mid-30s, 35% this quarter. So Microsoft had publicly guided for an acceleration, then had to pull back. They missed 2 of the last 3 quarters in Azure, so this is a good beat, pleasant surprise. Now they're 2 for 4 at the plate for making the numbers that they said, so I think everyone's still a little skeptical, but good to see the acceleration. M365, which is Office, that's 15% growth at the high end of guide, and revenue a little bit ahead, operating income ahead, EPS ahead. So far from what we can see, things are better than feared, but we don't get the guide until the call, and we'll have to hear. Remember, Amy Hood has never acknowledged there was ever a headwind, there was a blizzard, or a car stuck in a ditch because of black ice. So they will most likely continue to give a pretty bullish update and outlook. That's Amy's pitch, and it doesn't matter how cold or hot it is, she'll hold to we are going to execute, which is their marching orders from Amy. So we think that is again probably par for the course in terms of how they're going to guide. And I think again there were a lot of concerns about Microsoft and the durability. I'd say that most of the CIOs we speak with, Microsoft's the last thing they're going to cut in a downturn. And so even if you do see things get worse, which I think everyone's anticipating things are going to get worse, we believe Microsoft will be a better place to shelter than many of the other names we cover because of their durable franchise that cuts across applications, security, infrastructure, AI. And we continue to believe in the story.
I am curious, Brent, how cold is it going to get? How slippery is the ice going to get? In other words, if Microsoft's the last expense that CIOs want to cut, how bad would it have to be to see some kind of pullback? Can Microsoft continue to execute if there is a weakening environment?
The good news for Microsoft is they have the AI story, right? Remember a couple of years back, they started this push. They were the ones that said we are moving into an AI economy, and everyone got caught flat-footed, right? Google, Amazon, everyone was chasing Microsoft's lead, and Microsoft didn't want what happened with AWS in the past cloud cycle. They were trying to catch them. So I think they have the advantage where They've been AI first. They have a good portfolio. It's infiltrated every line of business, from apps to security to infrastructure to custom development. Nadella, the CEO, was on stage with Zuckerberg yesterday and said that, they both kind of articulated that between 30 and 50% of the code in the next year is going to be written by AI. Well, Microsoft owns GitHub, which is the one of the top, if not the number one place that developers go to help write their business applications. And so, again, no one's immune. Everyone's going to get impacted. I've been impacted. Many of us have been impacted already by what's going on. So no one's going to be immune. But again, when we're talking about relative safety, the durability, the breadth of Microsoft's product line, and then their AI first mantra, and then you have the single best CFO in software running the show, and you don't want to mess with Amy. So I wouldn't want to miss a number if I was in Amy's executive team.
Yeah, you don't want to miss with Amy Hood, for sure, Brent. Very well-respected CFO. I'm curious, conference calls starting soon. If you had the chance to ask Amy a question or two, what would it be?
What's driving the Azure acceleration, and what gives you confidence in the durability as we head into stiffer economic headwinds would be one of the questions among 10 others that we have.
And Brent, I want to turn briefly to Meta here as well, because it is striking that this company is raising its CapEx spending plans for this year, as the numbers seem to also largely be ahead of estimates. What does that tell you?
It's a contrast to what Snap said, and I think it suggests, again, the larger ad platforms are going to be in a better position. They had really good numbers across the board. As you mentioned in your lead-in segment, what's interesting is they raised CapEx. Everyone thought they would cut CapEx. They actually raised CapEx from 60 to 65 billion to 64 to 72. So I think it's giving. Zuck would only do that if he sees a return. And everyone says, well, Brent, these are like railroad companies. They're spending so much money in AI. Like, how on earth are we going to see the returns? You're seeing it in 16% revenue growth, earnings numbers that were $1.20 higher, and they've done a really nice job executing. And all of our ad checks lead back to somewhat similar to what I said about if a CIO had to go to a deserted island, they would bring one vendor. They'd probably bring Microsoft. If an advertiser had to go to a deserted island, you only get one vendor to pick. You'd pick Meta because of the breadth of their offering, the quality of the return, the opportunity in wearable AI, the opportunity to improve the searchability of Instagram. You go through. There's so many different drivers in Llama. We've said this repeatedly. Llama is such a hidden secret, and I don't think I think most investors know about it. But we think Llama is like basically a red hat inside of Meta, where you have a free call option on upside of the stock if they can figure out how to monetize Llama, which is their LLM, and everyone in open source is going to them. They're not going to just DeepSeek. It's a Llama and DeepSeek world, probably even more of a Llama than DeepSeek, but those are the two open source platforms. Closed source, you're going to obviously OpenAI and others, but they have a huge opportunity with Llama. And so I think there are multiple drivers still at Meta that are really exciting. And the fact that they're raising CapEx is, to me, a great signal that their investments already are paying off.
Yeah, and a surprise, as you said. All right, Brent, we'll let you dive back into the numbers to get ready for the calls. Thank you so much for spending some time with us.